a free ride. I only asked you to show me a real good time. I never asked for the rainfall. At least I showed up, you showed me nothing at all. It's coming down on me. Water like misery. It's coming down on me. I'm ready, rain on me. Drop, but at least I'm alive. Rain on me, rain, rain, rain on me, rain, rain. I'd rather be drop, but at least I'm alive. Rain on me, rain, rain.
Rain on me.
Living in a world where no one's innocent. Oh, but at least we try. Gotta live my truth, not keep it bottled in. So I don't lose my mind. Baby, yeah, I can feel it on my skin. It's coming down on me. Teardrops on my face. Water like misery. Let it wash away my sins. It's coming down on me. Let it wash away. I'd rather be dry, but at least I'm alive. Rain on me, rain, rain, rain on me, rain, rain. I'd rather be dry, but at least I'm alive. Rain on me, rain, rain,
Rain
rain
on
me.
me.
Rain on me. Rain on me. Oh, yeah. Rain on me. Oh, yeah. Rain on me.
Hands up to the sky. I'll be your galaxy. I'm about to fly. Rain on me, tsunami. Hands up to the sky. I'll be your galaxy. I'm about to fly. Rain on me. Rain on me. Rain on me.
It might seem. Oh, don't you dare look back. Just keep your eyes on me. I said you're holding back. She said, shut up and dance with me. This woman is my destiny. She said, ooh, ooh, shut up and dance with me. We were victims of the night. The chemical, physical, kryptonite. Help us to the base and the fading light. Oh, we were bound to get together, bound to get together. She took my arm. I don't know how it happened. We took the floor and she said, oh, don't you dare look back. Just keep your eyes on me. I said you're holding back. She said, shut up and dance with me. This woman is my destiny. She said, ooh, ooh, shut up and dance with me. A backless dress and some beat up sleeves. My discotheque, Juliet, teenage dream. I felt it in my chest as she looked at me. I knew we were bound to be together, bound to be together. She took my arm. I don't know how it happened. We took the floor and she said, oh, don't you dare look back. Just keep your eyes on me. I said you're holding back. She said, shut up and dance with me. This woman is my destiny. She said, ooh, ooh, shut up and dance with me. don't you dare look back, just keep your eyes on me. I said you're holding back. She said shut up and dance with me. This woman is my destiny. She said ooh, ooh. Shut up and dance. Don't you dare look back, just keep your eyes on me. I said you're holding back. She said shut up and dance with me. This woman is my destiny. She said ooh, ooh. Shut up and dance with me. Shut up and dance with me. Shut up and dance with me. Here we go again. I kinda wanna be more than friends. So take it easy on me. I'm afraid you'll never satisfied. Here we go again. We're sick like animals. We play pretend. You're just a cannibal, and I'm afraid I won't get out alive. No, I won't sleep tonight. Oh, I want some more. Oh, what are you waiting for? Take a bite of my heart tonight. Oh, I want some more. Oh, what are you waiting for? What are you waiting for? Say goodbye to my heart tonight. Here we are again. I feel the chemicals kicking in. It's getting heavy and I wanna run and hide. I wanna run and hide. I do it every time. You're killing me now. And I won't be denied by you. The animal inside of you. I want some more. What are you waiting for? Take a bite of my heart tonight. I want some more. What are you waiting for? What are you waiting for? Say goodbye to my heart tonight. Hush, hush, the world is quiet. Hush, hush, we both can't fight it. It's us that made this mess. Why can't you understand? Oh, I won't sleep tonight. I won't sleep tonight. Here we go again. Oh, I want some more. What are you waiting for? Take a bite of my heart tonight. I want some more. What are you waiting for? What are you waiting for? What are you waiting? Here we go again. Here we go again. Say goodbye to my heart.
Lori, can you let me start my video?
I want some more. What are you waiting for? What are you waiting for? Say goodbye to my heart tonight.
It might help if I took myself off mute. So
I was like, we see your lips moving, but we can't see you.
yeah. So I think that we're about ready to get started. So we make sure we get everybody out of here on time, although we do operate on Realtor time. So I'll just kind of go over some ground rules before we start again, similar to how we did yesterday. So again, I want to make sure that you guys all know that if you have a question that you want to ask, you can do that in a couple different ways. you can ask in the chat box, and we'll have somebody monitoring the chat box. Sometimes the instructors, it's hard to read the chats as you're giving the presentation. So we'll always make sure to kind of keep an eye on that to let instructors know to answer your questions. You can request to be unmuted by raising your hand. If you want to raise your hand, all you have to do is kind of go up to the participant box. And then if you go into the participant box, there's a little hand there that you can click to raise your hand. That'll notify us that you have a question. And then you can also request to be unmuted so that we can let you speak and you can ask your question verbally. And then, like I said, just make sure that you're being interactive. I know the instructors all really like it when people are interacting with them rather than having to sit and talk and be quiet the whole time. So have some fun with it. I think we had a really great session yesterday. Hopefully those of us that have to follow up with Jason and Pat and Kimber from yesterday will be able to live up to that bar that was set by them. But I think we got a really great session, and I'm going to give you guys a little rundown of what the schedule is going to look like today. So let me share my screen really fast. So here's what we have on deck. Now, if you guys are following along in your guides, the guides are going to be just a little bit different than the session today. Brandon is actually going to start us off first with the budget model. And so he's going to talk to you guys about setting some budgets. I know it might not be the most fun thing to do, but it's definitely going to have probably one of the biggest impacts on your business because really, if we make $1 million as a real estate agent and we spend $975,000 to make our business run, that's probably not where anybody really wants to be. So we're going to go over the budget model first. Then I'm going to go over lead gen model. And then we're going to follow up with Seth Daly going over the org model so that you guys that are looking at growing your business and adding additional team members and possibly even getting into expansion, Seth's going to do a great job of following up with that for us. And then we're going to wrap it up with Kimber is going to, kind of close out the day. She's going to, fire us up like she fired us up at the start yesterday, but she's going to fire us up to take action because ultimately, when we take a class, if we don't take any action on it, then it's really kind of pointless to take the class. So Kimber's going to give us some next steps that we can do and, really get us ready to go and prepared for 2021. And then the last thing here is, before we get started, I just wanted to go over the agenda really quick so that you guys know what to expect. So again, Brandon's going to go from about 10 to 11:25, a lot of stuff going on in the budget model there. So that's going to be the longest session of the day. And then we'll have about a 10-minute break, a little quicker one today than yesterday because we got a little bit more to get through. Then I'm going to talk for about 35 minutes or so on the lead gen model. We'll take another quick break. This one is only going to be a 5-minute one. And then Seth Daly is going to go from about 12:15 to 12:55. And then Kimber, like I said, will wrap us up. So with that, we're going to turn it over to Brandon. So I'm going to stop my screen share and let him take over. And Brandon Green is amazing, as you all know, and I'm really excited to have him talk to us today about the budget model.
All right, John, thank you. Good morning, everyone. I am so excited to see that 295 people have shown up at 10 o'clock in the morning on a Friday to talk about budgets. Like, right? Kimber's like, woohoo.
And I'm like, yay! Almost at 300 or one away. Yeah, 301, look at that.
There we go. So we had a decision. We thought we could either put budgets at like 5 o'clock in the afternoon on a Friday or 10 o'clock in the morning. And you can see that we decided to put it at 10 o'clock in the morning. So let's get it started. And I would love everybody in the chat just to put one word of how you're feeling this morning. So just go ahead and pop that into chat. Let's get some energy rolling in chat. One word. How are you feeling this morning? Maybe about budgets, maybe about P&L, maybe not about any of that. Like, how are you
feeling?
Love
it. Look at that.
One word: energized, amazing, great, inspired, motivated, ready to go. Aha. I love that. Grateful, thankful. Gosh, doesn't that feel good?
A lot of really good positive comments. I saw one in there that said stressed, but I think Brandon's going to take the stress out of your life today.
That's fair.
Early in California. Good job, Debbie. It is early if you're on the West Coast.
Carol's feeling empowered. Franklin's feeling excited. Ati's feeling optimistic. I think that went really fast there. Christine is feeling grateful. Well, I am absolutely grateful to be here with you today. This is a topic that I am incredibly passionate about. Let me start with just giving you a little bit of background on me so you have some context. I think some of you know me, but maybe not all of you. And then we're going to dive into the material today. So I've been in the real estate business since 2001. I started as an individual real estate agent selling houses. And I had come from an information technology staffing sales background, and before that, performing arts. So I didn't really know a lot about real estate, but I knew people pretty well, I thought at least, and I knew how to make some sales. And so I did a lot of door knocking and open houses and sold 12 million that first year. And that really got my career going. And then eventually began building a team. And then in 2006, partnered with the Mankites and some of our other fantastic agents in DC and opened Keller Williams Capital Properties, our first flagship location. And that began an entirely new journey where I went from all orientation around sales and building a team to now I'm working on like building a brokerage and like, whoa, what's that all mean? And I'm excited to say that we had an incredible ride and continue to do so. Well, we've opened a number of market centers, including Hyattsville, Maryland, just this week. So congratulations to the KWCP team for putting another market center on the books in Hyattsville, Maryland. Woohoo! And so I feel like over the years, I've had pretty much every role in KW, from mega agent to growing a team to a team leader to managing partner to currently principal broker for Capital Properties and master faculty and all kinds of stuff. So I'm excited to bring all that experience with you today. Now, why financials though? Why the budget model? I mean, some of these others are a little bit more fun, to be honest, but why the budget model for me? Well, let me just kind of go back and say that, I started in real estate in 2001 and sold a lot of real estate. And then by 2003, I had this idea. I was like, I think I need to file my taxes. Yeah. So you're already starting to do the math. So I send all my pretty disorganized file of stuff to my CPA, who I found out of a newspaper, literally. And he's going through this like jumbled mess, and he calls me up, and I'm on my way to a showing late, driving down I-95 a little too fast. And he's like, hey, yeah, so I'm looking for your quarterly tax payments, and I couldn't find any. I was like, quarterly what? Literally 2 years into the business, at this point, like 40 million in sales, a fair amount of GCI, I had a realization that they weren't taking taxes out of my paycheck. So that's kind of how it started for me. Is all of a sudden I'm great on the sales leaderboard, but the secret reality is I all of a sudden had this gigantic tax bill. And I was like, what am I going to do with that? So I kind of worked that out, although it was painful and it took some time. Fast forward a few more years, and now I'm paying my quarterly taxes, yay. But things are still quite disorganized, quite frankly. I mean, I've had bookkeepers, not bookkeepers, trying to do it myself, and had another really, really good year. And I got a call from a different CPA by that time. This was like 2005, 6 or so. He's like, yeah, hey, you still owe more in taxes. I was like, what do you mean? I made my quarterlies. He's like, yeah, but you made more last year than the quarterlies showed you needed to pay. And so you even owe more. And there I found myself, many years into the business now, behind on my taxes again. And I was like, what is going on here? I'm making really great GCI, but I seemingly don't have enough money all the time. And I'm just behind the 8 ball. And I'll never forget, I had a conversation with a really good mentor at that moment with frustration. And he said, yeah, Brandon, I think you got a problem. I was like, oh yeah, you think? And he says, I've noticed that the scope of your ambition financially doesn't match your skills or your habits. They're just not aligned. Like what you say you want to do and the things that you're dreaming about in terms of what you want to build for your business and your financial life, not backed up by how you're actually operating. And that was, have you ever had one of those like pops in the nose at just the right time? And you're like, oh, wow. It was a hard reality to hear, but he was right. And at that moment, I decided to make a real critical change in my thinking construct, which to that point had been, I'm really good at sales and everything will kind of work its way out as a result. I just need to sell a few more houses here and then I can get ahead of things. And I was punting the real work to the other side of the next transaction because certainly it would slow down and I'd have a moment, Almost 10 years later, I was like, well, that's obviously not working. And I decided in that moment that I would make a difference in how I was thinking about executing financials, and I would learn the budget model, and I would learn the economic model, and I wouldn't just skim over it and lightly listen to that class, but I would dive into it and figure it out. So luckily the last 10 years have been a lot better. But that's why I'm so passionate about this particular topic, is I've lived the reality of not paying attention to it. And it's just not any good. And my hope today is that wherever you are, we're going to be able to evolve your financial understanding just a couple more clicks down the road. And in the spirit of that, I want to give you a couple different ways to think about today. First of all, I want you to remember perfection is not on the menu. As a matter of fact, it's not even in the model. Like Kimber, have you heard, is Gary Keller, he's like, let's talk about perfection, section 4.
Open your books.
Not there. So for any of you, Kim, Pat, I see a few people, thank you for a few faces on here. If anybody's thinking like, I got to really get perfection's not on the menu, we're talking about progress. So just keep that in mind as we dive into this. And the other thing is, I want you to have strategic empathy for yourself. As you get into this, strategically be kind to yourself as you dive into an area you may not be as excited about or as familiar with, and be patient with yourself. Be disciplined and have some vision for what you can accomplish in the next 6 months. We've already heard that you can accomplish an enormous amount in 5 years, but you can also accomplish a lot in 6 months. So as we look at tactically getting into this, I want you to have a critical understanding of what you can really achieve in the next 6 months, and let's set some clear objectives as we go through here today, not around just the budget model, but around all the models. All right, great. So let's get rolling here. I'm going to be coming in and out of share screen and so forth, just to shake it up a little bit. So we're going to start here with the budget model. So now hopefully you're following along at home and you've got your materials or you've got a PDF or something. So let's start here on this first page, which should be in your student manual. It should say 5.1 is my hope on the student manual. By the way.
And we flipped the order, right, Brandon? So somebody flagged
yes.
Like lead generation comes first. So just, you are going to have to go ahead in your manual and then we'll come back.
Skip through to beyond the midsection, and hopefully you see, it should say 5.1 in your student manuals. And if anybody wants to validate that for me, let me know. But that's where it should start, with section 5, the budget model. All right. I am going to stop and allow some time for us to chat through or look through the chat and give people an opportunity to raise their hand and be unmuted so that we can have some dialogue in each of these sections. And we've got just enough time, I think, to do that. All right, so the budget model. The budget model really reflects a couple different things. It reflects the cash flow of the business as represented by the economic model, which I understand you spent some really good time talking about and working on. That is the investments you make and the return you receive and the resulting net income. So another way to think about it is essentially the budget model are two specific financial tools. One is a profit and loss statement, otherwise known as a P&L. And the other is actually a budget. And we're going to go through a lot of the details on this. I just want to start with kind of a high-level overview. So let's look at the P&L from a bit of a high-level overview standpoint. The profit and loss statement, sometimes also referred to as an income statement. You'll hear that from time to time, especially if you're interacting with a CPA or somebody in a different industry. But P&L, profit and loss statement, really is a management tool. It's a snapshot. It shows you from a data organizational standpoint all the stuff that's coming in and going out of your business. Now, if you've got a relatively sizable business, or even if it's a relatively new business, what you're going to find pretty quickly is there is a lot of data coming in and out of that business. I mean, you can see it just by opening up your credit card statement or your bank account. Transactions after transactions after transactions. The P&L is really an opportunity for you to organize that data in a cohesive manner that will tell you the story of some kind about your business. That's really what a P&L is. And I like to think of it as like a big data funnel flow. Like a bunch of stuff comes in, there's a bunch of stuff in the middle, transactions in and out. And then if you're effective at managing all of this, something comes out the bottom, and hopefully a lot of something in terms of net profitability. But when you're trying to wrap your head around what a P&L is, I think a real good way to think about it is a management tool that you need to review bi-weekly It shows what you've done compared to what you said you would do. By organizing all the transaction data and all of the different accounts that you have, credit card statements, loan statements, checking account, savings account, etc., to produce an analysis for you so that you can make decisions about what you want to do. At the heart of it, that's what a P&L is. Now, a budget. A budget functions quite different, although it is connected to the P&L and they work together with each other. A budget really is, it's a forecasting tool. It's a planning tool. It is something for you to begin to develop the skill of predicting what your business is going to do financially. Now, we already do this a lot with our sales, right? I mean, at this point, you're already predicting, my guess is, like, how many sales am I going to end the year with this year? Right? That exercise of forecasting and thinking through based on anecdotal evidence or actual data is producing some sort of conclusion for you in your mind about where you're going to end the year this year. Essentially, a budget does the same thing, but in a more formal way, and it does it through the use of an actual planning tool. It is created annually, or I actually like to do 6-month budgets, and we'll get into that in a minute, because sometimes it's easier to vision 6 months out than it is 12 months, but it's nice to have an annual tool. You can evolve to that. It does project expected returns and cash flow, and it lets you sort of say, okay, based on what my expenses are, what I know them to be, and what I forecast them to be, based on where I think my income is going to be, this is going to be the net result of what all my efforts are going to produce for me next year. It's a budget. Now, you can imagine at this point that if you don't have a profit and loss statement, you can't really develop a budget because you need all of the data from the profit and loss statement in order to create a budget. So there is a sequence to this, right? So if you're trying to think like, where do I start with all this? I'm going to tell you right now, the first place you're going to start is a P&L, which we're going to dive quite detailed into in a minute, and then you'll evolve to a budget. So if you're trying to segment out my to-do list, which I like to think about your to-do list even now, if you do not have a P&L, then you've got to do that. You can't do much more until that's done in terms of the budget, and we'll get into that. Now, there are a couple really good mindset principles to begin thinking through as you start to orient yourself to do these two critical tools. The first one is around spending. I like to think about it more, and the model teaches us, let's not think so much about spending, let's think of investing. So every time money is coming out of your business, what exactly are you investing in? Now, you may be investing in, and now, well, let me back up. You can probably imagine that when you're thinking about investing in things that are going to drive revenue for you. For example, a lead generation effort around your geographic farm. That's clearly an investment. I'm going to put X dollars into my geographic farm, hold events, send postcards, whatever, and I'm expecting some sort of return on that. Well, the same principle applies to things that may not be as evident as investments. For example, your insurance. Insurance is an expense on the profit and loss statement, but it's also an investment around risk management, right? So principle one, mindset principle one is think investments, not spending. And you start to get a little bit of a different framework on it. It's really the idea that every little in and out of your business is an opportunity. And are you thinking about it that way at a micro level? Or are you just thinking about opportunities in terms of the things you're going to invest in to grow the business? All of those expenses are opportunities. Number two is practice accountability and not accounting. And what I mean by that is I don't want you to think about this as an obligation. Like this really is the fundamental component to ensuring that the personal goals you have as a result of the business are fulfilled. And all of us are in the business to do something beyond sell houses and make money, right? We want to do something with that money. And this tool here is fundamentally critical to the fulfillment of that. And so don't think of it as a pain in the butt. Think of it as a critical element to you getting what you want personally. And all of a sudden it starts to look a little bit different. All right, so I'm going to just stop share for a minute there because I've been talking for a few minutes. Anybody have any realizations as a result of that on just looking at the budget and the P&L and thinking through a couple different mindsets? Do we have any realizations? Lori, are you helping with the unmuting or Dana?
Yep.
Great.
If anybody raises their hand, we will give them permission to speak.
Okay. I'm seeing a couple come through on chat. I appreciate that, Melanie. I like the investment versus spending mindset. That's really, really important. Latanya, I'm becoming less afraid of budgeting. Wait till you're done with me this morning. I have a way of doing it that is completely doable. Stay tuned. Let's see. I need to invest more, says Debbie. Yeah. Brad says, I've been looking for a class on the business side of real estate. Well, you're in it. And we're going to dive quite a bit more into it too in the hour that we have here together. I've never been so excited to learn this stuff. Well, thank you, Samantha. All right. 2 participants have raised their hand. Should we unmute one of them?
Yep.
We'll take one question or comment.
We have Philip.
Hello. Comment is, I just added up my commissions this year. I just moved to Keller Williams in March, and my business has quadrupled. And my wife has been saying, taxes, taxes, taxes. I'm in trouble, but I'll get out of it. But it's a good trouble to have. But I appreciate this because I have never focused on this side. And I need to. And you're right. We're business owners. Absolutely.
Yeah.
Yep.
I appreciate that vulnerability. And by the way, if there is anybody out there that's behind on their taxes, I have assembled a great team of CPAs and attorneys and so forth that can help you. So send me a DM on Instagram at Brandon A. Green, or just email me, Brandon@brandongreen.com. I'll connect you with some professionals who can help you out of that situation. So it is an elephant in the room that we don't talk a lot about in our business. And I appreciate that we sometimes have an opportunity to do that. So thank you for sharing. All right. So, okay. So let's keep on.
I think we have one more. Timothy's on too.
Go for it.
Am I unmuted? Can you hear me?
We can. Yes.
Timothy, I'm from Keller Williams Preferred Properties in Upper Marlboro. You talked about not spending, but investments. There are some things that don't give you a return. You know, it's like they're fixed things. Like you got to pay your dues. You got to have E&O and those kinds of things. Where you're not going to get anything back, but if you don't pay that, you're out of business or you may go to jail. And it'd be good just to make that distinction inside of the conversation, I was thinking.
Yeah, so thank you for that comment. I actually think of those as investments as well. Investments in a different way, though. E&O, as an example, is an investment in risk management to ensure that I'm protecting myself against the inevitable downside that our business will show to you if you're in it long enough. Dues, association dues, that's a fantastic one, right? I look at that and I say, well, there's an obligation to an extent to pay that. So what am I going to make sure I get out of that? And how do I, as a due paying member of the real estate community, participate in the advocacy of those organizations that support our industry at large, or maybe even tactically access the legal hotline, right, when I've got a problem. So I love how you're thinking about that. And it's taken me years to orient myself towards these like fixed obligated expenses as investments and opportunities. And I'll tell you, it's helped my mindset, but it's also helped me make better decisions over time. A small aside, as an example, on an annual basis, I do a complete insurance review of all the insurance premiums that I'm paying. And I generally get them rebid every single year because I don't just dismiss them as I got to just pay this. I think of it as an opportunity to invest. And therefore, I want to maximize my investment in insurance on an annual basis. So thank you for bringing that up. All right, great. So let's continue to roll here. So we've got now a couple terms I want to introduce to you before we get into the profit and loss statement, because you're going to see these terms in and out quite a bit. And it's important to make sure that we define these very, very carefully. The first one is cost of sale. Cost of sale is a term that kind of, confuses people a little bit. And I particularly love this definition because it really helps a lot. And that is, the cost of sale is actually what it sounds like. It is, this is the cost of acquiring revenue and includes the commissions of listing specialists, buyer specialist. It includes company dollar you pay to the market center. It includes royalty. It includes referral fees. It is a cost that is directly proportionate to revenue somehow. Now, let me give you a little bit of an asterisk on two big asterisks on this. I often, when I'm teaching this live, I'll have somebody say, yeah, but isn't like photography cost of sale, or, you know, my listing postcard? I mean, it's a cost of doing the sale, right? Well, here's the thing. Technically speaking, from an accounting standpoint, you could book a lot of different things in cost of sale. You actually could, though. We've decided here at Keller Williams to clearly define what we're going to call cost of sale so that we can have best practices data across the industry and give people more clarity on how people are doing compared to other people. So if your CPA says, well, yeah, XYZ is actually cost of sale, I'm not going to argue with that. But what I am going to say is you as the business owner need to ultimately have a report that is reflective of the business that you're doing, so that you can compare it to best practices our research department has developed to show you what other people are doing of similar production levels, so that you can make a decision about how you may or may not make some changes. So don't get too all caught up in cost of sale. Simply say cost of sale is listing commissions, buyer commissions, referral fees, royalty, and company dollar. That's what's booked in cost of sale. Now, the other thing that I'll say, and I'm going to say this a couple times and show you a different visual. Cost of sale is particularly tricky because it's not money that hits your bank account. The brokerage does the cost of sale calculation for you, removes it from the gross commission, and sends you the rest. So unless you specifically give your bookkeeper instruction to book cost of sale in your profit and loss statement by sending your bookkeeper or doing it yourself, I recommend a bookkeeper, your commission disbursement form, nobody's going to see cost of sale. Which brings up an interesting question, like why does it matter? Like if I'm not receiving the money, why does it even matter that if I go through all this effort and book it? And I'll give you a quick story. About 3 years ago, I worked with an agent and helped her develop out her profit and loss statement and her budget. And what she really wanted to do is she wanted to drive more revenue through the KW referral network. She was super excited about the new technology that rolled out. She's like, I really want to make more of my business come from KW agents around the country. I was like, great. I think that's fantastic. So she executed a plan, a touch plan. She downloaded the email list and she started, boop, 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 you know, went to the events, networked, et cetera, et cetera. This past summer, I got a call from her and she said, so I need you to look at my financials because something is going on here. Something is wrong with my net income. I'm not making the income that I used to make. What's going on? So we started to look at it. And can you imagine what we discovered? Right. We realized that she was wildly successful in executing a referral partnership with a number of agents around the country. And more than 60% of her business was now coming from agent-driven referrals, for which she was paying a 25% referral fee on all that business. So her success in the initiative of driving more leads by driving more referrals ballooned her cost of sale, and she was actually netting less money at the end of the day. Now, that's one of many examples of what can happen to cost of sale. It grows a lot too as your team grows, when you have agents on your team. But you can't see any of that unless you're tracking it. And the whole point of the P&L is to give you transparency on the data of what's coming in and out of your business, which means you have to have all the data there. If you don't, then you're only getting a portion of the picture. And therefore, the decisions you make will only be partially effective as a result. So that's cost of sale. I will stop for questions after this section too. Gross profit, also known as company dollar to you. Gross profit, that's the amount of revenue that's left after a subtraction of your gross commission income minus your cost of sale is your gross profit. Operating expenses, that's the cost associated with running your business, whether you have a transaction or not. And we'll go through a list of those. And then number 4, my favorite, net income. Pre-tax net income. That's after you've done all those subtractions. Now, a couple of little benchmarks that are really helpful to know is we do have some real clear goals for you and areas for you to shoot for in terms of the percentage of revenue for cost of sale, percentage of revenue for operating expenses, and percentage of revenue we'd like to see you take to your bottom line. You might even hear us say things like 30, 30, 40. And if you're like, what is 30, 30, 40? This is 30, 30, 40, which is we'd love to see your total GCI or total cost of sale of no more than 30% of your gross commission, your operating expenses no more than 30% of your gross commission, and your net income at least 40% of gross commission. Now, this is based on a $2.5 million GCI business. And I'm going to level set that for you in a minute. If you do not have a $2.5 million a year GCI business, there are some other numbers for you to look at that are not necessarily 30, 30, 40. So if you're sort of panicking and you're a single or solo agent, you're like, I quickly did the numbers and I don't have anywhere near cost of sale. I'm not saying go spend it. Like, good for you. But this is based on $2.5 million in GCI, which is a very different business than, say, a $250,000 a year GCI business. All right, let me stop share there for a minute because I just want to make sure at a macro this concept of these categories is clear. 30% cost of sale, 30% operating expenses, net income, but we're talking about defining the terms of cost of sale, gross profit, operating expenses, and net income. Do we have any questions around that? Let's see. Raise your hand right now. I'll give you 10 seconds if you have any questions. If not, I'm going to keep on rolling down the road. 2 participants have raised their hand.
We have a few. Yep.
Okay, great. Let's take a few questions. Go ahead.
Hold on.
Hey, Brandon.
Hello.
Katrina, how are you?
Hi, Katrina. Good.
Great. So question for you on concessions to close. What I find a lot of agents do is that if they're making a concession, they will simply lower their commission. They won't necessarily tell anyone that it's a concession. Like they'll say that to the MCA, my commission should now be $9,000 instead of $10,000. Would you suggest that they really track that as a concession to close for cost of sales purposes, or it's not a big deal?
So that's a really good question. I don't think I would track direct commission concessions on the settlement sheet as cost of sale, but I would track it, maybe on a separate Excel spreadsheet so that I understood over the course of a year, how often am I doing that and what's been the net effect of it?
Yeah, because I think that there's a lot of agents who do that on a regular basis, and it's a data point.
It's an important data point. And so if you are just imagining to yourself, yeah, I had quite a few incidences this year where I had a commission concession sort of at the last minute. If I were you, I'd open a quick little Google sheet or Excel spreadsheet, and I would just be tracking that at a macro over a course of 12 months and see, do I have a habit issue where I am, most of the time those concessions are as a result of home inspection, last minute property condition issues, right? So that could be a process improvement in the business. Excellent question. Bottom line, I would not try to book it in cost of sale, but I would track it to see if I've got a little bit of revenue leak going on and I didn't even notice it.
Perfect. Thank you.
Thank you. Let's take 2 more.
We have Kimberly or Robert.
Brandon.
Hi there.
Hi. Thanks for making this budget model so relatable and easy to follow along. My question is, I was wondering if you could restate the 4 or 5 elements that make up the cost of sale.
So yes, cost of sale, you have buyer commissions on your team, listing commissions on your team, company dollar paid to the market center as part of your cap or your split if you're not with Keller Williams, the royalty fee, and referral fees. Now, by the way, if you're on a team, the money you split with your team lead is your cost of sale. The money your team lead splits with you is their cost of sale. So you both have cost of sale. Those are the categories.
Thank you.
You're welcome. And let's take one more.
Hey, Brandon, this is Robert.
Hi, Robert.
I want to go over an example, see if I'm doing it right. When we have a buyer's agent, we get a DA from the market center that reflects just our income, does not reflect the GCI. So what I've had to do to have an MREA compliant prop P&L is put the full GCI in there and then do a line item for cost of goods sold for the buyer's agent to have a report at the end. Is that the way we should do it? And why can't it happen on the DA?
So I do believe that the information is on the DA at the top. It shows the gross commission income. An MCA would be better at answering that than I would. But functionally speaking, you're correct that you want to, in your books, book the total GCI, even if you didn't get much of it. And then whatever the deductions were to the market center, to an agent on your team, to an outside referral fee, all of that would be booked as a journal entry in cost of sale in your books.
Okay. The follow-on question is we have a contract transaction coordinator. She's going to do about 100 transactions for us this year. So the number gets pretty big. Mm-hmm. Cost of goods sold or operation expense? I heard conflicting information yesterday.
Depends on how you're paying her. So hold that thought. I think I'm going to answer that because I'm going to talk about compensation broadly and where things go as a result. If I do not answer that specific question, though, by the time we're done here, email me, Brandon@brandongreen.com, and I'll do that.
Wonderful. Thank you.
Okay. You're welcome. I see a couple of chat things I just want to address. The brokerage will pay the LLC fee for the agent. So whether the brokerage can pay an LLC versus you directly is a state-by-state legal issue. In most cases, most states are allowing commissions to be cut to LLCs. So check with your market center, check with your broker to make sure that you're clear based on your state and your particular market center's policies, how that needs to be handled. But in many cases now, that is allowable. That's getting into a broker specific thing. Okay. All right, great. Let's advance a couple more slides here. I want to talk about this operating expense and cost of sale, again, from a visual standpoint. We've talked quite a bit about cost of sale, but here's just a visual reminder. These numbers are based on 2.5 million in GCI. So if you're not at 2.5 million in GCI, then don't necessarily be too obsessed with these numbers. You're like, I don't pay $625,000. Oh, great. Well, so that's the example here, but it's just designed to give you a structural look at how cost of sale could potentially look. Let me bring your attention a little bit more over here to this other side, which are operating expenses, because I want to now dive a little bit more in detail into the profit and loss report by taking a zoomed out shot, and then we're going to take a real zoomed in shot on this. So a zoomed out shot of the profit and loss statement, we're going to just take the operating expenses section out for a minute, and we're going to notice a couple things. One is we're going to see 1, 2, 3, 4, 5, 6, 7, 8, 9 macro categories for operating expenses in our real estate sales business. Now, you could have a lot of other categories, and I'm going to show you a report with a lot more categories. Though 9 for sure is what you need. And one huge mistake that I see people make is they allow their CPA or their bookkeeper to set up these categories, and they don't name them this. This right here is sometimes referred to as a chart of accounts. And it is a mistake to have your CPA or bookkeeper drive the nomenclature of the chart of accounts, because you as the business owner are ultimately responsible for all this, and you need to understand what this is. Besides, your CPA needs to rename them anyway to file your taxes. So if your CPA is driving how all of this looks, they're driving it for one reason and one reason only, which is taxes. But you have to deal with the business on a day-to-day basis. So that's not a sensible thing to do. This is, which is to name categories like this. Now, there are subcategories under each one of these main categories. If your business is, say, less than $200,000 a year in GCI, I don't think you need any more categories than this. You could just have 9. If you want more categories, that's your decision based on what kind of transparency you want to see underneath all of these categories. And again, I'll show you an example of that in a minute. But most P&Ls that I see and analyze for agents, I look at them and there's like 150, 200 categories. It's a disaster. You can't see anything on that. So if you have a P&L and you're working with a bookkeeper, you're working with yourself, a really good exercise right now for 2021 is to set up your chart of account structure in QuickBooks or whatever you're using that matches this right here: compensation, lead generation, occupancy, education and coaching, supplies and office expenses, communications technology, auto, equipment, and insurance. Use those categories. Now, I want to show you a couple different things. Clearly, we have two that are relatively large. Your compensation and your lead generation of the 9 will be the biggest ones in most cases and make up about 30% of the overall expenses. So don't be surprised if this tends to be let me make up 50% of the overall expenses. Your lead generation here could make up as much as 30% of your overall expenses. So these two are the big ones, and you want to make sure you have a lot of good, clean, clear data here because there's just so much opportunity for improvement in these top two categories. Now, as a solo agent, right, or maybe an agent with an assistant, you'll have these same categories, but the percent of your GCI, you see this column right here? This may change a little bit, and I'll show you a different chart based on where your GCI might be. So, for example, you may not have 14.4% in GCI in compensation. It's hard to say. These percentages in particular are based on a $2.5 million team. That being said, there is one on the board here that almost regardless of the size or scale of your business ends up being about the same in terms of the percentage of your GCI that you should be spending on the category. And if you're seeing my mouse, you're seeing I'm circling it right now. Lead generation, business development. What are you doing to drive business? I'd say, I don't know, probably 8 out of 10 of the P&Ls that I analyze for agents, I find agents are dramatically underspending in lead generation and not overspending. And they often come to me with like, oh, I can't get my business to grow. I've been plateaued, blah, 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 blah. And I look at, well, how much are you spending on business development? I know you're spending a lot of time, but how much are you actually investing in your business? And it ends up being like 2 or 3% of revenue. You're starving your business of the oxygen it needs to grow if you're investing that little in your business. So if you're trying to prioritize where you're going to start your analysis, I would start my analysis here and ask myself and get some data around how much did I spend in 2020 on lead generation and business development? And what was the percentage of revenue as a result of that? How high or how low was that? All right. Let me stop share, take 1 or 2 questions, and then I'm going to bring you into a more detailed look at all of these things here. All right, so because I saw quite a few hands raised, let's grab one and see where we are.
Hey, Brandon, while we're doing that, there was a couple of people that just asked questions in the question box.
Thank you, John.
So yeah, Parisa wanted to know where does a TC coordinator fall because it's per transaction.
Okay.
And what Lana wants to know what occupancy means.
Okay. All right. So I think then hold that thought because I'm going to show a detailed chart of accounts that will answer the first question. Occupancy would be your rent, a desk that you might rent from the market center, or if you have your own space, that would be booked under occupancy and the costs associated with that. All right. Do we have one?
Hey, Brandon.
Yeah, go for it.
It's Sam. Hey, brother. How you doing?
Hey.
Good, good. So listen, primarily, my business is referrals. So I don't really allocate a lot of money to lead gen. I'm not saying that I shouldn't. So, what would be another way to still be able to utilize that field and, in terms of, reallocating the money to my sphere or people that send me a lot of businesses? I mean, a lot of business for referral business. Thanks.
Well, my favorite place to allocate it is back to profitability. That's my favorite place. I think, though, I would ask a different question, Sam, and I would ask, as it relates to my 2021 goals, if my investment in lead generation is under the standard, meaning it's less than 9 or 10% of my gross commission, and my goals ask me to grow in 2021, how am I going to do that? And would investing a couple points on lead generation in terms of some dollars help you do that? So, if you don't spend it, it just goes to the bottom line and profit. So you don't have to spend it. I would use it as a strategic lever to, as a business owner, decide what to do. My biggest request for everybody is know what your percentage is. I think that's the biggest issue. It's less about people up or down. It's the fact that people don't know what their percentage is as it relates to the model and as it relates to best practices. And so if you know it's 5% and the model is 10 and you're happy with the 5% gap because you're effective at what you're doing and you're getting the result you want, then don't mess it up.
Okay.
If you're not happy, then you have to look at that as a potential lever to make an investment with, knowing that the best practice model would say, you're underspending, and therefore if you did spend more, you might get a better return.
Thank you, brother. Appreciate you.
Hey, Brandon, could I chime in with a thought on that?
Yes. Who's
it's Seth?
Oh, Seth, I see you up there. Hey, Seth.
Hey, sorry. So I had that same question when I joined KW because we ran a really strong referral-based business. And what I found is when you remember that slide that talked about lead gen was about 10% and salaries were about 15%. What I found is that if you look at both of them together, they're about 25% of GCI. So one thing that I found for a referral-based business is that you might run a business where you're like, I'm not spending money on Zillow ads or Facebook ad campaigns or whatever else. If you're running a referral-based business, you might be spending money on client parties. You might be writing handwritten notes. You might be doing stuff like that. But what you find is your salary compensation might actually be a little bit higher than the number because you're paying somebody to hand address the personal notes. You're paying somebody to put together the party, so on and so forth. And so what I found early on was that my compensation, my lead gen, they always stayed inside that 25%, but my lead generation expenses were actually that I hired a person to do lead generation for me, like call my database.
Yes. I love that. I love that insight. And I would say what makes it super powerful is you knew and could track it, right? You had the data in the right spot so you could make a determination, say, well, this is what we're doing. And then as a business owner, decide, is that effective? Is it not? Do we want to do it? Do we not? I love that nuance. And because I think a lot of people are driven around referrals. Thank you, Seth. That's great. That's great. All right. So I'm seeing a lot of questions about where does this go? Where does this go? Where does this go? Well, let me show you. All right. So this, folks, right here is the MREA chart of accounts, the budget model. And this was one of the attachments that was sent out. It's a downloadable on KW Connect, and it's called MREA economic model here at the top. And then I am on the second tab here called budget model. Now, what this is it simply shows you where everything goes. That's it. And remember I was saying before, you do not need to have all these categories. As a matter of fact, I'd recommend you don't, unless you have a business north of 250,000 in GCI, north of 500 in GCI, north of $1 million. Then you do need more and more detail and more breakout in the categories. So let's go through this and just kind of get a summary view of what this looks like. So zooming out for a minute, remember structure-wise, see if I can get that a little clearer there. There we go, is that better? Structure-wise, the top part of the budget model is where all your income is booked, all of your gross commission income. And you can have one category for that, or you can have a bunch of them, depending on what you want to see. If you had a bunch of them, then you'd have residential income, followed by a breakdown of the residential income. Notice transaction administration fee income goes here. Total residential income. Maybe you have a commercial business. Listing, sales, referral, leasing income for your commercial business. Other commercial income, total commercial income, and then other real estate income. So all of your income gets booked up here. Right about now, somebody is usually making a realization that they have maybe other stuff going into their profit and loss statement with their sales team. And they've got just a bunch of maybe profit share, rental properties, etc. Our recommendation is that you don't put any of that stuff in here, and that you keep the income and expenses associated with your business as pure and clean and clear to the income and expenses associated with your real estate sales practice as possible. Because sometimes, I'll tell you, give you an example. So a few months ago, I was working with an agent who really, it looked like was having some fantastic profitability. When we went into the P&L though, what we realized was the agent was very successful with profit share and very successful with rental properties, but not so successful in the sales business, which was actually fine because it met this agent's goals. But because the P&L had it all kind of smushed together at the top line, it took us a while to say, oh, well, you're good job rental properties, good job profit share, but do you want to do anything with the sales business? Because there's not a lot going on there. And unless you get that clear, it's hard to determine. So that's the income section. Relatively straightforward income. Now, we've talked about cost of sale. That's the second category coming in your P&L. And you'll see the individual categories associated with cost of sale: commissions to the brokerage, royalties, listing splits, buyer splits, referral income paid out, brokerage transaction fees go here, and other commissions like referral fees go here. Cost of sale. You can have just one line to keep it simple. I highly recommend it, unless your business is generating enough revenue to have a breakdown of all of these different expenses. That's your decision as a business owner. Income minus cost of sale is called gross profit. That goes right there. Now let's get into expenses. And this is where everybody's like, where does this go? Where's this go? Where's this go? Here you go. As a matter of fact, what might be fun is just to have this document available to you and your bookkeeper. And when something comes up and you're not sure where it goes, just search the document and it'll tell you where it goes, rather than developing all these categories. Compensation, that's where all the salaries go, including yours. And we do highly recommend that you pay yourself a salary as soon as humanly possible. You can get yourself on a W-2. You need to consult with your CPA. You need to consult with your business attorney to make sure you get the right entity and the right structure set up for taxes. But we recommend that you pay yourself a salary as soon as possible, and you book it under salaries. And you see we even have a category for it called executive. There you go. Management, other management on your team, administration, and other salaries. So you can imagine that there's a lot of ways you might break this up based on how your team is configured and what you want to see. That's under salaries. Contract labor goes under compensation. All the 1099s, excluding salespeople on commissions, that goes up in cost of sale. But if you're hiring a cleaning crew to do this or that, or like under contract labor, for me, we do a lot of contract labor. I like to break out the contract labor based on vendor, so I can see who we're paying contract labor to throughout the year. It's important for me to see. Professional services go here. CPA, attorney's fees, etc., go right here. Professional services. Benefits processing, benefits, payroll processing, payroll taxes, other benefits expenses all go there. How you categorize that is a little bit up to you, but we want you to at least have the macro category of compensation. And then here's some suggestions on the micro categories, and then you get to a number here. I'll go through the whole thing and then we'll stop for some questions. Lead generation and conversion, the next big category. Now, how much you want to break that up depends a little bit on you, but we certainly say you could go prospect and marketing with all of these subcategories. Here's where you put your events, your lead conversion tools, meals, gifts, entertainment, other lead generation initiatives, total prospect and marketing. I get a lot of questions like I paid for this, or I did this for my listing. There's a whole listings management section here now under lead generation and conversion. That's where that would go. Right? Services, marketing, signage, others. I like this breakout between, personally, even in a small business, between prospecting and marketing and listings management, because I want to be able to analyze what am I spending that is derived by business already received, AKA sign, photography, marketing, flyers, versus the money I'm spending to get more in new business. It's important to see the distinction there. Both go under lead generation, but you'll see there's a nice breakdown there. So in your profit and loss statement, you can see what's actually happening, total lead generation and conversion. Couple more. Occupancy, that's your desk rentals, utilities, repair, maintenance. You're not going to likely have depreciation of capital improvements. That would be if you leased out a space of your own. Property taxes, other occupancy. Communications and technology, there's quite a bit in here. Telephone, answering service, internet service providers, voice response, website creation goes here. Website maintenance fees go here. Education / coaching / dues / travel, all here. Training, travel and lodging related to education events. Coaching, consulting, books, audio, visual subscriptions, dues, your association dues, your MLS dues, your whatever dues go here. Education, other, there. We're almost done. Automobile, mileage goes here, depreciation, gas, a little asterisk on automobile. There is a difference. There is a difference, folks, between tracking the expenses associated with your auto and the tax deduction methodology for auto. While they are related, they are different. This P&L is designed for you to track the expenses associated with your auto. Your CPA will advise you about probably doing a mileage calculation to create a tax deduction. So while the P&L is informative to the tax return, the P&L and the tax return are not the same things. And there are a couple areas where they're actually substantially different. One area is automobile because of how the tax laws are configured. So on this document, you're actually putting what you're spending here. Insurance, including your auto insurance, your E&O insurance, which you're paying through that monthly fee to the brokerage. So you've got to sort of break that up here. Equipment and furnishings, see if there's anything to highlight there. Office supplies, office expenses. This is where your bank charges will go. And then other expenses, and we're almost done. Charitable contributions go here. Any interest on loans can go here. Any state franchise taxes, some states have that, go there. And then at the end of the day, you have business profitability. I'm going to talk about below the line in a minute, but that's just like a bunch of stuff right there. Again, this is in the MREA chart of accounts document, and the tab is the budget model tab. Let me stop because I'm going to get a drink. Does anybody have a water? Or coffee, actually. Questions? Let's get a little bit, let's see if we have any Q&As coming up or anything, John, you've caught in the chat.
Hey, good morning, Brandon. This is Mike Lorino from KW Metro Center. Great class. Real quick question for you. Be interested to get your perspective on the comment you made about why you highly recommend paying yourself a W-2 salary. And the reason why I ask is because as any income that comes to the agent, whether it's through a sole proprietorship, an LLC, or any other structure, it shouldn't really affect the taxes because it's a pass-through entity anyway. So the agent's going to pay taxes on the entire amount that the business takes in, regardless of whether they're paying themselves a W-2 salary or otherwise. So my question is that the recommendation is more just tied to accounting for it in the P&L so that you have a specified box in, say, the spreadsheet for the model to account for what you're paying in salary versus just having all the money come in and you just have a big pile of money that you just take from to pay bills otherwise. So what's your recommendation for why pay a salary?
Excellent. So there's several considerations to this. The first one is a tax consideration. And you're absolutely right that you're going to pay an elevated tax amount in general when you roll any money out of your business to you personally through a W-2 structure. There is Social Security and so forth that you have to pay as a result of that, versus what is considered an owner distribution or an owner dividend, where you're literally just transferring money from your business account to your checking account. Those are tax different. So there is a tax consideration. And anytime there's a tax consideration, I tee it up to your CPA for you to look broadly at your tax world and make a decision regarding taxes. That's just one consideration, though. The other consideration is consistency of income. And I to yourself personally, and I think that's a big deal. There's something psychologically, especially for other family members who may not be salespeople with you, to see a paycheck come through as a result of your efforts on a monthly basis. I know in my family, that helps my family dynamics. Now, that may not be an issue for you or other people. You know, it may be okay just to take a big distribution on a quarterly basis. Though for a lot of people, the consistency of getting a direct deposit, even if it's coming from your efforts, psychologically creates a different level of fulfillment. And so I think there's an element of that around consistency of income and fulfillment and being able to see that you're actually producing something for yourself. That's the second consideration. The third, retirement account configurations. When you're an employee of your own company, you have some options around IRAs that are different than if you're not an employee. There's a tax element to that, but there's a financial planning element to that based on these different retirement setups and retirement vehicles. So if I'm an agent and I'm trying to decide, do I pay myself a salary? If so, how much? Then I need to run that decision through a tax filter, sort of almost like an emotional family dynamics consistency filter. And then I would run it through a retirement planning vehicle filter. Not that I think I would recommend a lot of people rely on Social Security when they retire, but as an example, if you're not paying any money into Social Security, you're not going to have to count on anyway. So that's in the back end around retirement. So those would be my three things: is look at taxes, look at how important consistency of income is for you, and look at what you're doing at a macro over a 20-year period of time, as an example, from a retirement account standpoint, and decide, do you pay yourself a W-2? If so, how much? And do you just distribute yourself money on a monthly basis by moving it out of the business? Great question. There's a lot to that. Yeah. Okay. Let's take two more. Yeah.
Really quick too, Brandon. Some people are asking about the workbook, and that should have been emailed to you with the materials. If you don't have it and you want to start playing around with it, I'm going to type the link into the chat box so that you can access the workbook that Brandon was just using.
Good. Thank you, John.
Brandon, this is Patty Sile, Keller Williams, Laguna Niguel, California. Thank you so much for this class.
You're welcome.
I have to admit, being in this business for a long time, this is the first year I have a bookkeeper with my P&L, and I'm looking at the percentage and everything. Looking at this Excel sheet, I see that you have an actual column and then you have a budget planning column. Mm-hmm. How do you plan your budget? I do have the actuals, but I do not know what to put on the budgets.
Hold that thought. I'm going to roll into budgets here next.
Okay, I'm ahead of myself. Thank you.
Great job. All right, let's take one more and then we'll roll forward.
Hello?
Hi.
This is Jennifer. Can you hear me?
Hi, Jennifer, we can.
I'm not used to all these Zoom meetings all the time.
Doing great.
Okay. I just have a quick question. I thought that you do pay Social Security tax when you are under commission. I thought that you do still pay that.
So what I'd say two things to that. At the end of the day, we all end up paying for it. And second is that is a specific tax question based on your individual situation. So I would have you go to your CPA to clarify how Social Security tax is working with your particular situation.
Okay, and I have one more question. What if your salary is not consistent? So right now, I'm strictly on commission and it just kind of ebbs and flows. How do you pay yourself a salary in that situation?
Well, it can be tough. My recommendation,
percentage?
Well, I would say if you're growing your business and it's up and down, but you do wish to create some consistency through a paycheck, I would have a very small paycheck that can be consistent. Okay. Even if it's like $1,000, right? Okay. And then just get in the habit of that level of consistency and grow it over time. So I see a lot of agents who say, I'm going to set my salary level relatively low, And then on a quarterly basis, I'll see what kind of cash I have left, and I'll distribute to myself a number that is representative of what we actually did for the quarter. So get it started as soon as you can, set it as low as you can just to build that consistency, and do it in partnership with your CPA so that you're looking at your taxes and your financial planner so that you're looking at the long-term view as well for yourself.
Okay, thank you.
You're welcome. All right, let's move forward here. So I think we've talked quite a bit about that. Now let me show you here some different percentages and benchmarks based on sale or size and scale of business. So I was sharing with you earlier that a lot of what we were just showing was based on a $2.5 million business. This would be based on other businesses that aren't $2.5 million. So you'll see, for example, if your GCI is 150,000, we have 49% in net income. And these are averages of a ton of agents that the research department has reviewed their P&Ls for. And on average, the GCI of 150,000 is producing 49% net income for agents. On average, as we get up to 1.6, it's producing 26% net income. Now, we have best practices recommendations over here, which is where you see, here's the 2.5 million, the 30, 30, 40. So don't freak out if you're not at 30, 30, 40. This is just an opportunity to grow and evolve. Remember, the principle at the very beginning is perfection is not on the menu today. So don't worry about where you are. I want you to get grounded in the data of where you are and set some goals and how you can move forward. Now, here's some additional detail. This is more detail. All of this is available in KW Connect, probably in that link that John sent or somewhere close to it, that shows you the percentage details in the different categories based on GCI. So for example, the 150,000 GCI, when we were talking earlier, about occupancy, education, coaching, salaries, lead generation, right? Here's 11.2% on lead generation at 150,000 as a percentage of GCI and so forth. So this is after, by the way, let's just sequence this for a minute. First, you need a profit and loss statement with all of the data for 2020 coming in and out of your business. Given date 2020 is already, pretty closing here pretty quickly, then maybe what you need to do is set up your chart of accounts for 2021 and begin tracking data really, really well for next year. After you have data, then you can start to understand your percentages of GCI. But until you have the data in here, clearly you're not going to be able to see that. And this is just a screenshot of what we just went over, which is a lot more detail. A detailed P&L, which is easier to see, I think, in the Excel spreadsheet that John put a link in. All right. Now I want to talk about budgets for a minute. Cost of sale. Well, let me think. What do I want to say about budgets? Budgets. The deal with budgets is it needs to be created after you've got some pretty good detail in the P&L. And if I go back to this screen share here, you'll see that we've got two categories here. We've got the budget category and the actual. Actual would be, of course, the actual data for the time period that you're viewing, and the budget would be what you projected. Now, ideally, you got to get this data into some sort of accounting software system. QuickBooks is probably the most known system for that. There's another resource I'm aware of. It's called REProfit. REProfit, PROPHET.com. Maybe somebody can put that in the chat. www.reprofit.com. REPROPHET is another system you can use. There's a variety of other systems that are not as expensive as QuickBooks. Though eventually when you get this data into a system, you can look at the actual expenditures based on different snapshots in time. So you can look at last month's, you can look at the last 6 months, you can look at the last 12 months, et cetera, depending on how much data you have into it. And then we have this budget category, this budget column. Let me show you something on budgets that has really helped me over the years in managing to create a budget. So let me bring you to Jackie O'Neill Real Estate. And Miss Jackie has decided that she is going to take the MREA, Millionaire Real Estate Agent, chart of accounts for 2021 and create her budget. And what she's done is she's put all of her data in a Excel spreadsheet or a Google sheet. And she's like, great, now what do I do? Well, this is a really easy way to manage your budget. What I recommend is if you don't have any data, this is going to be an entire guesswork game. But if you do have data, you'll have some information to go upon. So if you take your data and you put it into an Excel spreadsheet, then at the very top of the Excel spreadsheet, I recommend you go like this: January, February, March, April, May, right across the top like this. And if you've never done a budget before, I recommend you don't go any further than that. And then you start to go line item by line item with the data you currently have next to you and make a guess as to what your individual line items will be for the coming year. So these categories, let me go down here to, let me start at revenue. So let's say we're in January, and let's say that you've decided to have one line item for revenue in January, your GCI. Then you have to ask yourself the question, how much GCI do I think I'm going to generate in January? Now, I know you don't know, but you probably have a good idea. And if you've been in the business for a while, you may even have some data on that. So you make a guess, and that's what budgeting is a guess. And hopefully over time, it becomes a more and more educated and accurate guess. But initially, it's a guess. So you might say, well, I think I'll do $6,000 in sales in January. Okay. Or actually, you know what? I'm going to be more optimistic. I'm going to do 10,000 in sales in January. Excellent. Now, what's my cost of sale on $10,000? Well, hopefully you've got some data on that, but let's say you're not capped, and I'm going to just do fast, easy math because of time's sake. And let's say you've got 30% there. You've got $3,000 in cost of sale for the month of January based on $10,000 in revenue. Then you go down to and I'm doing this month by month by month, folks. Then I go into expenses and I say, well, how much am I going to spend in terms of compensation in January, in terms of lead generation in January, in terms of rent in January, in terms of education and coaching in January? Maybe I'm going to bump that up. Maybe I'm going to, I'm not going to travel anywhere, but let's move that. And you literally go, oh, my car payment, I know what that is. Insurance, I know what that is. Equipments and furnishings is going to be low. Hardly anything in office expenses and nothing there. Boom. You've literally created a budget for January in about 15 minutes, maybe, of thoughtful review on what you think you might do in January based on either what you know or the data that you have. Then you do the same thing in February, right? You say, well, I don't know, maybe 8, then maybe this is 2,500, and down we go. I'm not going to do them all, but I think you're getting the point, right? You go like this, et cetera, down, 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 and you do 1, 2, 3, 4, maybe 5 months at a time. And you're going to see a number down here that shows you your total expenses and your net profit before taxes. You create a budget 1 month at a time based on your view into the future. And if your view into the future is only 3 months, then start with a 3-month budget. If it's only a month, start with a 1 month budget. But I would say if you're doing any sales, you can at least get 2 or 3 months ahead and do that. Eventually, you're going to be really, really good at this and be able to do like a 6 or a 12-month budget. But don't start with that. Start with getting your P&L together with the chart of accounts and making sure that everything is where it needs to be. And then understand the percentages of the expenses. And then you can start forecasting into the future and predicting what you're actually going to be able to do by putting it all in an Excel spreadsheet, putting the months across the top, and going one item at a time. All right, that's really fast how to do a simple, fast budget. I can actually share that template with you. Yeah, I will. I see somebody say, I get the template. But this is just a template. It's better if you use your data using the MREA chart of accounts. Any questions? I think we can take maybe 1 or 2 questions, and I got to zip here through to the end. I see a couple people have raised their hand.
We have Damon.
Damon, okay.
Can you unmute Damon? Or we'll go on to next one. Kelly.
Did you say Anthony?
I hear your voice.
Hey, Anthony.
Anthony.
Hey, good morning, Anthony Keller Williams, Flagship of Maryland. Question. I'm a new agent, but I'm dual career. Now, when it comes to the budget and doing that and all that stuff, sometimes, well, as a new agent, I've used money from my other career to fund. How do you do that as far as when you're doing your budget using money from my current other career that I'm trying to get out of, but how do you put that in there?
Yeah, so that would be considered a capital investment into your business. And in that transaction, do you have an entity set up, or are you just doing it through your personal?
Right now, it's just personal. Like I say, I'm new, but I'm tracking it of how much I take out and where I do it. And I try to, anytime I do it, I try to make sure I use just one specific bank card and one account, so I know where it all is.
I see. So, I would, as quickly as possible, move to a different set of books for your business than for your personal. Maybe that could be a goal for you for 2021. Therefore, that way you can literally make a transfer from one account to another, or it sounds like what you're doing, which is keeping one credit card as the business, even though it's a personal account.
Well, what I did is I split my accounts, and actually, I'm using the one card, but when I use it for stuff for my business, I can draw from, like, I added another savings account to my bank account. So any money that I'm going to use for this business, I specifically just take it out of that savings account. I don't use my checking account. I have two savings accounts on it. So I only use one saving account for the business right now.
Okay. So you got a lot going on with that there's a tax implication to how you're doing that. I'd recommend you speak with the CPA relatively soon and get a set of books set up for 2021. But in the meantime, the most important thing you can do is just document that that's what you're doing with those transactions, so that as you get a little bit further down the road and you want to set up a proper chart of accounts, you'll have some history on how you were funding the business to begin with. Since it's not actually an official business yet, it's not what's called a capital contribution. You're spending your personal money or you're using personal debt, which is how a lot of people have started. Keep track of those transactions, label them accordingly, and maybe you're just even using a simple Excel spreadsheet for now. That's okay. Perfection, no. Progress, yes. All right. There's more to that, but we should probably talk offline.
Right. Okay. And the reason why I asked, because I was looking at the breakdown, and like what it showed, even like you paying your dues, like as a new agent, maybe the first year, or sometimes the first 2 times you pay your dues, they may come out of your personal pocket, not money that you made from real estate or not from real estate transactions.
That's true. Though you want to keep track of that and note that, because you're essentially what's called a sole proprietor, which means you're doing business without an entity, but you're still going to be responsible for the tax consequences. And the only way to truly understand that is to make sure you have a good, clean set of records, so that when your CPA does do your taxes, even though it's not under a separate entity, it can be documented properly. And then as quickly as possible, would love to see you move to an entity, even if it's a single member LLC entity, so that you can begin as soon as possible to have a separate set of books and a separate bank account and a separate credit card and a separate everything for your business. You'll still continue to maybe transfer money back and forth, but the sooner you can create a wall between the two, the better off you'll be.
Thank you.
Okay. Great. We have one more, and then I got to roll on through. Go ahead, Lori.
All right, we'll go to Wanda.
Okay, Wanda.
Hello, can you hear me?
Yes.
Okay, I have a question in reference to using QuickBooks versus the chart of account. And which one is better and which one should we use? And let's keep it real simple.
So the chart of accounts is simply a naming structure that you can input into QuickBooks. So I think you could use QuickBooks, but use the labeling of the chart of accounts. The Excel spreadsheet that we have for you simply lays out the structure, but the Excel spreadsheet is not a particularly effective bookkeeping mechanism. So use QuickBooks, but use the categories that we're supplying to you in that budget model tab in the chart of accounts. So the chart of accounts, again, is just the structure of the names of the different expense and income categories. Okay, I hope that helps. All right, so we just have a couple minutes left here. Lots more we could discuss, but obviously we've got to roll forward a little bit and give you a little bit of stuff today. But there's quite a bit more that you could dive into. I'm hopeful, though, so far we've given you enough that you can advance this for yourself. There are a couple tools in your workbook. I just want to make sure you see that we do have my business plan budget model worksheet, which is a way for you to see what the percentages are based on a $2.5 million GCI. I would alter those based on your GCI and back to the slides I was showing you earlier. And then here, you can start to fill in a little bit of detail on what your budget plan is on this worksheet, if that's helpful to you. Now, a couple other points I want to make. Let's see, cost of sale and operating expense, compensation and cost of sale. So when is an expense that's compensation cost of sale, and when does it get booked into compensation? That was a point that we brought up before, and I want to make sure I clarify that. It's cost of sale if it is a commission and it is directly tied to the revenue as a percentage. So directly tied to revenue as a percentage, directly tied to GCI as a percentage, as a commission, highly likely it's going to be booked in cost of sale. But that detailed list we gave you gives you some more clarity on that. All right. And in the 2 minutes that we have left, I want to give you some ideas of a few traps to avoid that I think will be helpful to you. Trap number one is not taking the time to understand how the model works and how it connects to the other models. The beauty of this particular course is it shows you everything at once. These do interrelate. So continue to understand how the budget model interacts with the organizational model, interacts with the economic model. Another trap to avoid is being too lenient with money with the purpose of big returns. In other words, like, where are you spending the money and are you measuring returns? We see that sort of be a little bit wonky. So making sure you're tracking that really carefully. Hiring too many people too quickly, and we're going to cover more of that in the organizational model. And I talked about this at the beginning, chasing GCI instead of a return on investment. So you cannot sell houses your way out of bad financial bookkeeping. Trust me, I know. So don't try, because you're just punting your success to the other side of the next house sale. And finally, obviously we covered a lot. You probably have a ton of questions. I do a lot of this. I love this topic, if you couldn't tell already. So please make sure you follow me on Instagram, Brandon A. Green. DM me your questions. This is the season for all of this stuff. Brandon A. Green on Instagram. And then if you want, I do have a newsletter where I do put stuff out like this once a month. Just go to brandongreen.com, subscribe to my newsletter, or shoot me an email, and I'll just answer your question as fast as I can. But my goal is to get as many people as possible with a good, clean, clear books set as we move into 2021, so that you're not just as excited about your GCI and your volume and your units, but you're also excited about your net profitability as we begin to focus on profit first. All right, John, I'm turning it back over to you.
That was awesome. And then a couple things really quick. I know Brandon's not going to pitch it on his own, but I'm going to pitch it for him. He's got a P&L workshop that's coming up. I'm going to put a link to that into the chat box if you're interested in that. And he also is offering some coaching after to make sure that you got that really dialed in. So that link has just been put into the box. Want everybody to, say thank you to Brandon, because that was an amazing. I saw a couple of comments in there saying, I never thought I would get so excited